We're going to be showing you 2022 model, so it might look like a lot of noise at the moment. I'm going to make everything make sense. Each time we open up for a new week, let's say for instance, just a random number, if we closed at 100, well, when we open up, the markets haven't been moving for the weekend, but it doesn't mean that the price hasn't changed. So when we come back, whatever price we have, which was here, so when we opened up at 6 o'clock on Sunday, we've now dropped down, what's that, about 100 points, 100 handles. So this is called our new week opening gap. So I always use these lines. Those lines just help me to know where it is. Other than that, I don't really use much color. So you can see, so Friday, where we closed out, literally Friday, 4:55, and we open back up at 6 o'clock on Sunday. So Monday markets actually open up on Sunday evening. What do we have? So what's the basis of the trade? Why have we taken a trade? Is it valid? So from 3 o'clock or about 3:30, we had a pivot down. We've come down, and then what's happened? We've swept this sell side liquidity, which was from Asia. So in the evening time, we made these equal lows inside of this imbalance. Where have we also fallen to? We've fallen to the bottom of the new week opening gap. So in this scenario, when you've seen, we dropped not only, what's that, another, so from 590 all the way down to, well, what's that, like 420, so another 100 and something handles. So you have to think to yourself in your head, when you're looking for a trade, well, we, from the top 600 down to about 400 something, we had about a 200 handle drop in a matter of an hour, only for that entire move to be ran back out to the upside. So if we've reversed that entire thing, would you then want to carry on looking to sell? For me personally, no, because the idea has been invalidated. The same thing here. Come all the way down to take this level out. Once we've shown that immediate move to want to push away, I want to look for buys. I don't want to look for sells, because it's shown me exactly where the momentum is. So from that point, how do you then start to look for a trade? Well, you think to yourself, we've already come up this high. We've had a high, low, higher high. So we've had a change in the state of delivery, because now, rather than going down like bearish structure, lower, 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 we're going higher, higher, higher. So same thing in this example. We have this tiny, I'll zoom in here. See this imbalance here. So from the first candle to the third candle, you got both the wicks, yeah? And that gap in between is the fair value gap. So ideally, if I was here beforehand, the 6:30 entry would have been good. But I was planning to take a trade at 7 o'clock. 7 o'clock reason being that there's no news today. If there's no news, it means that you can trade pre-market. Pre-market being anywhere from 7 till, technically 8:30, because that's one of the opens, but technically till 9:30. Once we had this here, this is where the solid entry would have been. And also down closed candles. If we're going up, down closed candles should support price. Down closed candles should support price. You can make money and still be wrong. Does that make sense? You can make money and still be wrong. So even if you think that's going to come up to the liquidity, it doesn't matter if it does or not. You can always just take a partial at a convenient point. And where's a convenient point in this scenario? Right here. So as soon as you came in, I had 2 contracts on in total. So 2 contracts times the value, which would be $2. So that's $4 per point. So say in this scenario, for instance, you'd be risking 56. So 56 times 4, you're looking at about 260, somewhere in that region, 240. To be able to make, depending on where your risk to reward is. So say in this scenario, if we're aiming for them higher highs up here, you're looking at 1.8. So somewhere in the region of about 400. But this is all dependent on what price actually ends up giving you. So in this scenario, we came up to that premium. So if you look, I've got a Fibonacci from the bottom of the range to the top of the range. This is 50%. So this is in a deep premium. Once you've come to take this, we're either going to come up to it and bounce off of it and come away. That's not what I want to see happen. So after I've taken any sort of profits, I'll then move my stop loss to break even or above break even, and that's absolutely fine. But this is the basis of the 2022 model. It's always going to be the same thing. Liquidity sweep, yeah, that's there. Changing the state of delivery. So if I was to, I wish there was a pen, but I can't find it. We go up, down, up, again, down. So you see this wick, that wick is the moment when we've now made a higher low. Higher low means bullish structure. Bullish structure means a change in the state of delivery. So before we're going down, now we're going up. That's important only after we've taken basically a session's liquidity. What session was this? It's from Asia. So these things all have to add together. 7 a.m. because there's no news. Once again, there might still be a decent trade at 9:30. It's not to say there isn't, or 10 o'clock, 10:30, etc. But you can always find clean trades in this time frame, especially looking for equal highs. So this high and this high, what's above there? Liquidity. It's always going to be the same. It's just going to be about finding where you're happy to get in and always executing with the same model. Sometimes you're going to get to the chart and there's been no liquidity sweep already. You're going to have to wait for one. Is that going to be difficult for you? That's a whole nother conversation. You're going to have to check your own character flaws and be able to sit there and actually wait for the trade to develop. In this scenario here today, there was no waiting involved because the run had already happened. We were already in a position where we've come down. We shouldn't really want to come back below this area, and if we do, this should be our last turning point. Right guys, so we're back and well, all the price actions played out. So what I wanted to do was show you my executions from the day. From when we got on before, we executed one more long position. So as you can see, we took the first execution from the imbalance and the stop loss was below the down close candle, inversion fair value gap 1, inversion fair value gap 2, and the buy side imbalance as well. So we had a lot of reasons why we didn't want to see price go lower after this previous liquidity sweep. First entry, and then we took one partial here above the high, so right inside of this sell side imbalance here in a deep premium like we said, and then the next contract was taken out at here. So that was me completely taken out of the first position. Nice, I think I made 0.5 R like we said. That's cool, that's fine. Then I thought about the structure that we've been given. We had this fake move down from 330. We've pushed up all the way into London close. London close has showed literally no willingness to want to go down. We pushed back up again at 7. We've come more than 3/4 of this range back up. So it's very, very highly likely that this was just a manipulation from London going down fakely so that we can deliver higher. So when you think about what is bearish structure or what is bullish structure, this is bullish structure. So you have a low, a high, a higher low, a higher high, a higher low compared to here, higher high. Once we break down like this, you can see the structure being rebuilt. So this is called the sell side of the curve. This is the buy side of the curve. So you can see from this point here, we make a low, a lower high. First of all, we make a high low here, and then we make a high high. So we can see that we're now back in bullish structure. So what happens when we trade back down to here? It's just we're making our higher low. And what's more important as well is that we're trading into this sell side imbalance, buy side inefficiency, which is now turned into inversion fair value gap. So if I highlight this here, now you can see that we've come down and we perfectly, look how the bodies are retesting the consequent encroachment of this inversion fair value gap. So when you have layered confluences like this, you've got the 50% level that we're trading back into now as resistance, or no, support rather. We've flipped it, now we're trading back into it. We've got the consequent encroachment of this inversion fair value gap, because look, we've pushed back up through it and now we're treating it as support. That means it's an inversion fair value gap. And then also we've got the top of the new week opening gap, which you can see here. So we've got loads of reasons why we should see movement away from this point. And then you can see take off a small position, and as we come up into the highs, take off another position here, And then once you got that full push out, I was just trailing my stop behind and bringing it along with it. But I hope from this that you can kind of understand, when you already have a direction in mind, you don't switch. And if you do see ideas that are going against the trade idea that you kind of already had, it's a good idea to then just sit and step away, because everything should line up to what you want to see, and you should be able to have conviction in the direction that you want to see it go. So if we were expecting lower prices today, we would have been cooked. But because of the structure, and when you've seen things like this play out so many times, it becomes like second nature. Even here, where price is fractal, we've had a liquidity sweep here, and then we've changing the state of delivery. But then look, we also have the same thing here. So if I put a line right here, we've got like an internal sell side. So what does internal sell side mean? Well, it means a sell side liquidity, a liquidity that's inside of the range. So this is your external, but this is internal. So that's an internal liquidity. You see how at 8:30 we briefly run below it and then show that big conviction away from it. I was very aggressive with my stop loss and making sure that I put it to break even, meaning I can't lose any money as quick as possible, because this is a trade that I wanted to see respect this area here, not retest, not retrace, not hang around there, move straight away from. And that's pretty much what happened. So overall for the day, you can see how you have to listen to structure, you have to follow your main idea, and if you don't have an idea, you don't have a trade. So that's our first video, and we'll go through other lessons on another day.